Well, hello and welcome once again, Maverick Traders. It's Joe. Let's get into our next candlestick pattern. It is going to be the shooting star. So let's break down what it looks like, some of the statistics on it, and more importantly, how to trade it with higher probability and the better situations to look for this. Now, good old Bulkowski, let's jump onto his website, and I pulled the statistics from this. This is the statistics over 100 trades. Just seeing the shooting star itself. What happens? Does it go up? Does it go down? Does it go sideways? What happens 10 days afterwards? Its biggest move. It's how often it appears. All of those things. Now, we are going to take what these statistics are, and we're going to add our 2 cents on it to see if we can't put it in a higher probability situation, just like all our patterns. But let's nerd out with what Bulkowski has to offer. First of all, the theoretical performance for this is a bearish reversal. I'm going to show you an example of this and explain why we use it as a bearish reversal. There's some psychology to the formation of the candlestick itself. Tested performance over those 100 trades is bearish reversal 59% of the time. This did change the direction of the stock, at least to the downside. Now, it's not every time, but 59% is better than average. It's something you don't want to put all your money in, but it's better than what we saw with the doji pattern, which is about 50-50. 51% of the time, the doji would reverse. The other 49% it would continue. So this is showing a little bit more consistency when we see the bearish reversal. A lot of that has to do with where it develops and where it confirms. I'm adding my 2 cents as well. Frequency rank is 37 out of 103. It's not as common as the doji. Remember, our dojis were in the top 10. This is to the upside, but it's just off of the middle, so it's not like these things are frequent, which is great because I want to see a low frequency pattern that has a high testing performance percentage, and that's kind of where we're leaning towards with the shooting star so far. Continuing on with our nerding out here, overall performance rank is about 55, taking those into consideration. So this isn't one to write home about. It's basically on the lower level of the 103 patterns as compared to the best percentage, meaning price target, however, is 84%. This is a bull market with a down breakout. So once these do appear after a move to the upside, there's an 84% of the time this will reach its target. Now that's easy to do because remember, what is the price target? It's the measurement of the pattern to the down or the upside. So these patterns, you'll see it here, are pretty tight. They're pretty small, so it doesn't need much for it to to meet its price target. Now, the best average move in 10 days is 3.86% in a bear market with an up breakout. So this is primarily for a reversal signal, but over measuring 10 days past the development of the shooting star, not a confirmed one, but just the shooting star, the best move on average is about 3.86%, but it is to the upside. There's your little hiccup. There's your caveat. So the best daytime performance ranks 46 out of 103, or a little bit better. Then you can see the overall performance rank at the top there, 55 out of 103. Interesting. So this is going to really make a difference on where this develops in an overall trend, or I should say pattern or move. So let's break it down. Here's the example. We've got ourselves some bullish candles. We got our shooting star at the top, and then the confirmation to the downside. Now, to continue my thought with what I wanted to start off with, this shadow here has to be 2 to 3 times larger than the body. And the ideal shooting star does have a small body on the lower part of it. Now the confirmation candle here on the right is going to be the biggest part of this. 59% of the time we do get that confirmation. This confirmation alone can exceed that the candle formation's target, right? The price target. All we have to do is take this range and add it to the candle moving lower. And you could see even with this confirmation example, we're pretty much already there. So another note I'd like to make right now, this shooting star candle does not have to be red. It can be green. The psychology behind the shooting star is that the bulls came in and pushed it all the way to the higher point, and then they completely failed. The bears took over and pushed it all the way back down. Now, it would be nice to see a bear candle, or a red candle in this case, because the open is higher than the close, which means not only did it come off of its high, but it actually closed lower. So a little bit more oomph. I'm not sure if that makes a huge difference when it comes to the overall pattern over 100 trades. Maybe you guys should go do this on your own, right? And tell Bolkowski about it. Anyways, long story short, that's what it looks like. The confirmation is what we need to actually get into the trade and see if it can move lower. Now, best setup conditions, downtrending chart. Even with the shooting stars that continued to the upside, they still came from a downtrending chart, just seemed they moved a little bit higher. After a bear rally, once again, we want to see some candlesticks move to the upside until the buyers get exhausted or tired, and it rolls back over the shooting star. Remember, the psychology coming off of that high point really says that the bulls are done and the bears are taking over. Confirming below the shooting star low, that has to happen. Remember, with the continuation pattern, if the stock continues higher and we don't see price action get below the shooting star low, it never confirmed. We can let this thing move and kind of just let it go. Mid-level frequency, but high level of target percentage. Yes, the percentage is short, it's small, it's sweet, because the candlestick pattern itself is, but 84% of the time it can meet that. So if we're just looking for a little bit of a hiccup or confirmation to a rollover, this is a pretty decent little trade. All right, guys, let's go jump out and take a look at an example that I have for you on this. And I've got a few, actually. It's pretty cool. So here we are on our little chart, and I'm just going to go ahead and start clicking some days forward. So we've got kind of an uptrending chart here to begin with. So continuing over, we've got all sorts of big candles, engulfing candles, all sorts of different things. We're starting to fall down a little bit lower. Now I'm looking, well, there's a good break. I'm looking for something that is going to kind of bear rally. And here's our first attempt at it. And there we go. So we got ourselves our first shooting star. And I'm going to zoom in on this guy here for us. And you can see that the shooting star is right up at the top. Now this one isn't red, and I'm totally fine with that. This candlestick doesn't have to be red, but what I want to see is a progression or a move higher, and then what could be a signaling pivot point, and that's exactly what we've got going here. So all we need now moving forward, folks, is that next candle to confirm below the shadow, or I should say the low of the body of this shooting star. Now here is our fun hiccup, and this is what I think makes this easy. The range of this shooting star is from here to here, and I'm going to do my best to try to match this as I draw here. So, okay, so that means from here to, about there would be the target range, right? So they're supposed to be about the same size, maybe a little lower. Sorry, folks, let's do that. Now, you can see in the confirmation candle, we actually got that and exceeded it. Now, what I like about this first example is because it did come off of a low here, and we did rally back up. So this is a bear rally in a downtrend, which this could be more than just, hey, we turned around for a second. We could have a sustainable move that could create even a further drop for those traders that want to be in this a little longer, things of that nature. Or you got an options position that you want to see if it can exceed or have a certain amount of time before it expires. So let's see what happens. I'm not sure on this one. I should have checked it before, but looks like we're hesitant. There you go, another move to the downside. So in this situation, it actually came back and revisited that previous support from its bounce right through about here, didn't it? So that would be a pretty good price target in the short term. Let's go a couple of more days and see if this changes at all. And looks like we're coming back up. All right. Now I do have another example coming up here soon. It's right in front of us. Check that out. This is the 7th of October. What did this just do? Well, it shot up and it gave us another shooting star. So let's see if this shooting star confirms. Now this is gapping, but technically when it comes to Bolkowski and the way that he tests these, he just pulls them up. If he sees one, he sees what happens over the 10-day period and writes it down. So let's see where this goes. Now, did this confirm? The answer is no. It did not trade below the previous low. It did not trade below there. Let's go another day and see if that changes. Okay, there's our confirmation. So let's go next. There it did. It definitely reached its target. Let's see if it continues. And it didn't. So it was very short-lived. It did hit its target. Let's continue forward. And here's the interesting part. I'm just going to go ahead and see if I can get this here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm going to shrink this down a little bit. Okay, so we know that 10 days afterwards, the majority of the time, or the best run that these do have, is to the upside of 3.86%, and this is a great example of it. Just to clear up so many questions if you guys have how he measures this. So here is the signal, and here is the 10th day after the signal, right? And you can see that it did, 59% of the time it does reverse, and 84% it does reach its target. But the 10 days afterwards, it usually ends up higher, which kind of hurts this. So it's a short-lived reversal once it is confirmed, 59% of the time. But after the 10 days, this is something you probably want to steer clear of. I think this is a pretty good example to explain how that's measured. All right, I do believe there is one more coming up. Okay, so here we go. I got one more with a confirmation. Another gap up. Now this actually came from a trend to the upside. So we've got our shooting star up in this area here, and we did get a pretty good confirmation. Once again, a very large confirmation candle. So I'm just going to go ahead, and what we've been doing for this class specifically is just giving its full 10 days. So that's day number 1, and that's confirmation. Let's go 2, 4, 5, 6, 7, 8, 9, 10. All right. So in this example, we actually did get our confirmation the second day from this area, and despite it coming from an uptrend, this after 10 days had a pretty good substantial run to the downside. So when it comes to where they develop, and if you really want to hold on to these, manage them with some sort of protective stops, or if you've got some sort of an options position, knowing that in 10 days on average this usually moves higher. You could play the short version of it, but you can see that if you stick behind these, they actually can generate a little bit more. It just depends on what you're looking for in the trade itself. All right, guys, so a couple of examples on the same chart. It's kind of neat to see those, but just kind of some food for thought as you go back out. So let's do a quick review and see what we came away with. So the pattern frequency is 37. It's mid-level, which makes it a little bit more rare, much more rare than the common doji that we've seen in the top 10. Even though price target is 84%, the frequency is light. Now the pattern rank is also mid-level at 55, and I think a lot of that has to do is because the moves are usually short-lived to the downside. 59% of the time here, tested performance, it does go down, but over the 10-day move and over the 10-day move, this thing turns right around and moves upward. So I believe that's kind of what's throwing it around, is even though they do confirm to the downside, they're short-lived, so you got to be kind of quick with that. Something to mull over, guys. Once again, I love these statistics because they are what they are, and they're just pure. So how can we use these to our advantage? You got to put them in different situations. Take these numbers and then see if you can make them better by putting them on the correct chart, the correct move, the correct sentiment, the correct sector. We can always just try to gain that little bit of advantage to make these numbers look a little bit better. All right, folks, thanks again for joining me. Look forward to seeing you on the next one. Bye, everyone.